Welcome to Real Money, Real Life, the podcast where we get real about money and the messy human stuff that comes with it. I'm Linda Grizely, financial wellness speaker, personal finance educator, and creator of the Me Money Method. This is the show for people who feel behind financially and want to finally understand money and make confident decisions that work in their real life. Because money isn't just math, it's life, and you deserve to feel confident with money and good about how you spend it. Hello, everyone. If you're listening, you are one of the real ones, the ones brave enough to admit when you don't understand something and wise enough to ask anyway. Crypto, one of the most talked about and least understood financial topics of the last decade. Many people, especially women, feel behind, intimidated, or unsure where to begin. I'm one of those. And in this episode, we're going to slow it down. We're going to find out, what is Bitcoin? How does crypto work? Can you really buy small amounts? What are the risks? And where, if anywhere, does it belong in a responsible wealth building plan? This conversation's educational, not advisory, and designed to reduce intimidation while increasing clarity and protection, but not to give you personal financial advice. Today, my guest is Shawn Owen. He is the founder and CEO of SALT, S-A-L-T Lending, one of the early pioneers in crypto-backed lending. His company enables individuals and investors to leverage digital assets like Bitcoin without selling them, offering lending and yield solutions. His broader mission centers on helping people build and preserve wealth in a rapidly evolving financial landscape. He's been an advocate for Bitcoin since 2011, drawn to its decentralized digital hard money foundation, and is currently co-authoring The Bitcoin Advantage, which explores how decentralized systems can help individuals and entrepreneurs manage wealth outside traditional banks. Shawn has spoken at events including Polycon and the World Crypto Economic Forum, and is passionate about making complex topics like Bitcoin more accessible to both enthusiasts and skeptics. Welcome, Shawn.
Linda, that was a wonderful intro. It's such a pleasure to be here. I think we have such a great alignment of things that we're interested in. Really looking forward to having the conversation with you and your audience. So thank you.
Yeah, so glad you're here. I would love to hear what first drew you into crypto, because I think that's something that we all wonder, like, how do you get involved? How do you get started? So tell us your story.
Yeah. So, I do have a bit of an interesting story from a perspective of coming into it earlier, but I think it's the journey that everybody goes through. And you always feel a little bit intimidated because it's a technology. And so the topic can get very complicated easily if you want to, but it doesn't have to be. And so I first heard about this and was like, wow, that's kind of an interesting idea. And then it just really caught my attention, particularly a global currency that was digital, that wasn't controlled by anybody, in a way that was fixed supply, which is a big one for me from an investment standpoint. And granted, I'd just come through 2008 and was really re-questioning, kind of like thinking through money in general and everything around real estate at the time. And it gave me a perspective that caught my attention, this idea of like gold that was digital. And so I would say again that for the person who's just getting started thinking about it, it is a topic that can be very intimidating. And you could go in so long. It's been 15 years for me, and I think I still could learn tons. Like, there's so much more to learn, but it depends on how you're applying it. So from the standpoint of money and thinking about it as an asset, it's super easy. It's very easy. It's less intimidating. From the standpoint of a technology or a global impact or all these other things, it can get much more complicated. But it really drew me in to think about equal access, democratization, the ability for something to be fixed supply and couldn't be printed or inflated or manipulated. And it almost seemed too good to be true. And I think, like most people, I was kind of a skeptic. And so you come in thinking in some way or another, I'll do myself a favor and prove this wrong. And if it turns out to be great, something else. And then it just really took me, in a way, it just captivated me in such a strong sense that I felt like I had to get behind it. I couldn't think of anything more important in my life to kind of focus on outside of family and health. But besides that, it was the most important thing I could think of to spread and help build around. So it's much more than just technology, and definitely much more than just money.
Interesting. So, why was crypto created? Is there a problem it was trying to solve, or?
Yes. So, from a fundamental math problem of money, the problem to solve is how do we have money that's fair? How do we have money that is equal for anybody, that you have equal access to earn it? Right now, no money has ever existed that's really functioned well that has allowed that. So it's the first time in history that humanity's had a truly finite, scarce asset that we can prove is scarce. Like, you can't prove how much gold there is. You definitely can't prove how much money there is. And even when we had something like gold that was used with money, it was manipulated all the time, and it was very clunky and hard to use. And so it's solving one problem, which is a store of value. It's like a savings account. And if it did nothing but that, it does a phenomenal job. I would say it does better than anything else on the planet for saving your money. And that's really the core value proposition. Now, crypto is a much bigger, broader term that comes from the word cryptography. And that's where it gets very technical. And that's where there's a lot of watch out kind of warnings. Like, that's a huge topic of what people call crypto. But speaking to what I would say before that really existed, crypto just meant Bitcoin because it used cryptography to secure its actual technical background. And I'm speaking only from a sense of Bitcoin right now because I think it's simpler for people to understand. And it's definitely the right place to start.
Okay. So, Bitcoin, when it first came out, I think there were a lot of people who were like, oh, this isn't going to be around. This is a wackadoodle idea or whatever
Totally.
you want to call it. So, why did you think it had long-term potential?
It was almost that I wasn't even sure if it did. Like, I went through the same questioning all along and thought, this could go to zero. I understand that. But it was such a good idea and it was so important that I said I would be willing to ride this to the bottom. I'd take it all the way. Like, if it goes zero, I don't think it will, because there's people like me that would hold on forever. Like, if one or two people think something's valuable, it has some form of intrinsic value. Yet it was always kind of, oh, well, maybe I'm wrong on this one at certain points. It was like $200 and it was bad and it's a long time ago. But so it wasn't necessarily that I was a genius and just knew this was going to work, because I didn't. It was more that I hoped and prayed that it would, and am thankful that it did. And I think that it's amazing and that it really is worth everybody's attention, even at a base layer, just because it is another alternative to what we've already had in the past, and it adds value. It doesn't take away. So you could only really get a positive benefit by this working out. You couldn't really have a negative. And that doesn't mean it's going to take over everything or it's some kind of scam. It's neither or. It's that I believe it's an infrastructure technology that's the first of its kind for humanity, and that it's a net positive on so many fronts that it really does warrant at least a little bit of education from everybody. It's a very big idea.
It is a big idea. And I know, like, your mission focuses on building and preserving wealth.
That's
so
right.
When you talk about crypto or Bitcoin, how does that fit into the philosophy of building and preserving?
Yeah. So, one of the things I really liked about your work is when you think about the value-based planning and like the fact that we're all subject to emotions, and it always feels like we have to work all the time. And it's like, well, how's this set up? And it feels a bit out of control in a way, right? Like, I would say just the world we've been born into, speaking for myself, it has always felt like you better get up and keep working, because there's always this reality where you've got to catch up and keep up, and you're not gonna have enough. And it's that scarcity mindset. And when you think about something that is deflationary from the standpoint that it's finite, there's only so much of it, and nobody has the control to go turn the printer on. Nobody can just go forge or fake or print or whatever you want to call it, quantitatively ease this into existence. That in itself is probably the thing to put into the center view, because once you know the same thing I know, and both of us know that there's nobody in between that can kind of play the game or take advantage of us, or we don't have a disadvantage because we're not close enough to the money printer, or it can't just be changed because of politics or something else. You have a level of certainty that we've never had. We've never had this, even with hard assets like real estate. Like, you have a certain degree, but it's not the same. And so it brings this value-based approach, which is, if this is true, then my hard work and energy can be saved, and I can actually preserve it. I can go to bed, and I can wake up the next day, and I can know that what I worked for, if anything, is going to be appreciating value, because if there's any more people that worked also, we're kind of helping each other, versus the alternative, which is who knows? Like, I don't know how many dollars there are. I just know we're constantly going further in debt. I know how the system works very well, and I still don't totally know. And so to have that level of predictability and to see something that just kind of is what it is, and one equals one instead of one equals I have to be some kind of math genius and have an inside scoop with people on the inside, like it's a totally different paradigm. And it does directly relate to what I think is actually a more fundamental first principle, which is we trade our time today to work for things so that we have something for tomorrow, and we need to save that. And that's called work and savings. And I think that's actually a very honest way of thinking about how we all produce value for each other and ourselves. But nothing is worse than thinking you're doing that and you're constantly kind of being either stolen from, or it's not enough, or the game is changing, the land is shifting, right? And so just that predictability, that sense of understanding creates a foundation that you can build upon for saving wealth, which has never happened before. That's the first of its kind, really, on so many levels.
Yeah. So give us the like crypto 101 or Bitcoin 101. Tell us like we're fifth graders,
Yeah.
right? What is it and how do we use it and all that?
Right. So if you just think about, I think the easiest way to look at it is to do an analog of gold. So I think we all understand there's this rock that people have always thought is kind of valuable. It's semi-scarce. And so when we find it, we put it in a vault and we save it. It's valuable. So you have this thing that's gold, and we can test it. We can prove what it is. It can be forged, but it's hard. And people find it valuable, and there's only so much of it. That creates a common denominator, a playing field where everybody involved kind of says, well, it's gold. It has an intrinsic value. You can use it to make jewelry. It exists. If you think about that in the digital space, we have never had that because we lived in a world where the printing press turned into the copy and paste, and then it went digital. And we had this kind of opposite, which is it's infinitely copied. There's no scarcity whatsoever. In fact, with AI these days and internet everywhere and everybody just copying files like crazy, it's gotten to a point where you don't even know what's real. You just definitely know it's not scarce, like it's abundant. And when something is that abundant like air, it's not valuable anymore, right? And so the fear of most money systems is that, in contrast, if you're not careful, it can become like the printing press. That's why that analogy works so good. And it can become worthless. That's a fear, right? So imagine that you just have these gold bars and there's no more. Like, imagine if there was no more gold. That's an easy way from a fifth grader to think about this. We found it all and there's no way to make it, and there's none in the existence anywhere. Well, that would give you something that if you put it all in one big room and everybody had a part of it, you would know exactly what your position of that was next to everybody else's, because you could say 1 ounce is 1 ounce, or 10 ounces is 10 ounces, or however you want to think about it. It just gives you that ability to keep a denominator or a measuring stick, meaning, in simple terms, we know what we've got and it can't be faked. So imagine that you are now saving some money, you sell some lemonade, and somebody gives you some gold for your lemonade. Would you rather have that gold, or would you have somebody say, I'll give you a piece of paper, you give me the gold, and I'll just trade you for a piece of paper and you can come back and get the gold later, which is how money started to go from gold to paper, right? Originally, before it got detached. Well, we could go really far in that example, but eventually you end up with things have gotten so complicated. You can't teach it to a fifth grader. You cannot teach the current financial banking system to a fifth grader. They will not understand it. But I can teach the simple principle of just sound money, or a hard money that is known. And so it's fundamentally a bearer asset where it's a known quantity. There's no debt issued. There's no like bond being created in order for it to be paid back. It doesn't have phantom interest rates that are on paper. It's completely different. And I think that's the most important thing is anybody on the planet can own some of this without really much of a barrier anymore. And it's not going to change. It's not going to go away. Once you have it, it just is what it is. You could save it forever, and it's probably going to go up in value simply because of that. Right? That's simple enough, because I think it is actually very simple, but it's really easy to kind of slip down the route of going down many, 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 many more questions. So I'll stop there.
Yeah, no, that was great. Okay, so one of the misconceptions is when people see Bitcoin, I think now it's like what's around $75,000 or whatever at the time of this recording, and they think, well, it's $75,000 for one Bitcoin. How do I get in?
Right.
And so I think you have some explanations on how that works.
Absolutely. So that's one of the most fundamental lessons too, is that in fact, it's the opposite. So with something where it's like a stock where the company can always go print more and you go, shoot, I missed out. I think I'll go look for the thing that's at a penny because it's going to have more potential for it to increase in value. What you're not aware of is the bias that's in that, which means that yes, it looks like it's a smaller amount and it could go up more, but they can go print a lot more and there's a lot more of it. So it's actually it's not an equal comparison. With Bitcoin, one Bitcoin is just a way to say out of the totality of it, there's 21 million chunks, but you could divide it otherwise. That's just the way the denominator works. Really, it's like I like to think about it as if you had one big brick of gold and you could just shave off pieces of it, but no matter what, you can melt it back together and it's all the same. There cannot be any more or less. It just is one big chunk. Now, if a company did that when they issued equity, you would have a comparison, but that is not true. Like companies can just go authorize and issue more stock at any point in time, and they usually do. And so do countries with currency. So people are trained to think about the world that exists with stocks and with currency, and they apply that to Bitcoin, and they think that they're too late. But the truth is that it's never too late because you're still trading your time for a certain amount of a known quantity that the market is valuing, and it's going to hold in that same reality. It's still going to be the same amount that you got. Of course, you could have gotten earlier in time, but that's the whole point. The preference of time and your ability to work for money exchanging your time, that's the real measurement. And that's the real light bulb that goes off once you start to think about it, that makes you think differently than the way we've grown up thinking about things, which is quite the opposite. It's actually more that you don't have enough time and it's slipping away from you, not that you're going to have more time in the future because you're gaining more the more it compounds. It's fundamentally just a bias, and there's a lot of ways, and there's probably smarter people than me by a lot that can explain that, but it's in simple terms, you should never really look that way because I even felt like I was late. Everybody does. Like everybody I've ever met has felt like, oh man, I wish I was earlier. It's like, well, yeah, that's true about everything, right?
Right.
The next best thing to do is plant the tree now.
Right. So putting it into your portfolio, is it a growth asset, a hedge, a speculation? Like where does it fit?
This is a great question. So I think the majority of the mainstream investors would call it somewhere between a growth asset and a hedge. I do agree with that, but I would say that's not really the full picture. I think you should also look at it like it is simply a savings account and or a finite commodity. There's only so much of it. Why does that matter? Because if you just simply look at it like a growth stock, you really miss the whole point. You're only thinking about it from one point of view, and it's not enough of the right view. And you're comparing it to like what we just talked about, where you're putting it in the wrong category. Two, if you think about it as a hedge, well, you're saying, and I do agree that it's a hedge, like without a doubt, I would say it's a hedge. But two things could be true. Like I think that you could have the dollar live for a very, very long time, be digital, and continue to just become a global currency, and have adoption. And Bitcoin could continue to adopt. Those two things could be true because they're serving quite different ends. Eventually they compete, and eventually I think Bitcoin wins. But it's a long time, and it doesn't have to be like either or. They actually add value to each other, which is like kind of the business I'm in. You have to have both sides of that. And when you think about it from just an investment point of view, I do think that's a good way to look at it. But it almost meant this is part of the problem is I think we've all been trained that we have to go out on the risk curve and we have to throw our money out there and invest. Otherwise, we're not going to be able to make it. Like just working alone isn't enough. Yet I think that in a certain paradigm, just working alone is enough. And Bitcoin makes that case. It just takes a bit to kind of put it in perspective. Does that make sense? Because it's all of the above, and money and technology. Like it's a lot of things, but it misses the mark if you only put it in one of those two categories. So I hesitate wanting to call it just one of those.
Sure. Okay, tell us how do you own it? Where is it stored? I mean, it's not like you open up your brokerage app and it, you don't just see it right in there, or you don't open up your bank. So tell us about that.
So you can these days in a lot of brokerage accounts get a paper representation of it, or what I would say is a digital representation. And when you go to the bank, what you're getting when you see your bank balance is actually the same thing. It's a digital representation, meaning They're a custodian. You're trusting them to hold on to it. You know, with the banking scenario that they don't actually have all of that, but they're, you know, because they're lending it out fractionally. However, they owe it to you. So you got an IOU. With Bitcoin, this is really one of those things that caught my attention as this is crazy important and this changes things. Is that imagine you had a stock of paper stock of a company in the old days, you would get certificates. If a certificate of a bond or of a security, you had to go hold on to that and you had to protect it and you put it in a safe. You might put it in a safety deposit box, but nobody could just go relend a bunch of extra stuff and say, well, we've got an IOU for you. That was not allowed because it wasn't money. It wasn't banking. You still had to have this one-to-one paper certificate. That is more like what Bitcoin is, which is you could take it and hold on to it yourself, or you can send it to a custodian like what we do. And either or, it's still a certificate that has to be there. And if you can't prove that, there's a problem because it's a one-to-one asset. You should never have a fractional situation where somebody's just taking a promise. That's a terrible recipe for a disaster. But it's very easy these days, I think, and that you can go to every one of the apps like Cash App, PayPal, you name it. Like they're all going to offer it. Fidelity, everybody. A few years ago, it still was kind of making that curve. I think we're like now far, far beyond that. And it does basically come down to one fundamental difference. It's just like an asset that could exist in your hand, except for also in somebody else's custody. The technical details of it are that you have to secure it differently, but that's actually the same as banking right now. It's just most people don't make that comparison. In order for me to take a stock certificate, put it into a digital form, and then promise that I've got it for you, I have to do all the same things. It's just the technology is a bit different. And you don't have this open network that's verifying and securing it. You only have my company, right? So it's far more secure than any other form of digital representation. It gets a bad rap because people hear these old stories of, oh my gosh, you lost your password and it's gone forever. That's true of any kind of actual asset that's real. Like a real asset has that reality. And so it's not for anybody to just go and play around with it. Those were stories that people were early on didn't really know. And that doesn't really happen anymore these days because of those stories. But that could happen with cash or anything else too, right? It can happen with a car. It could get stolen. You never see it again. So it's a world that we kind of live in as long as you realize that's just part of having something physical. And it's weird to think of a digital thing physical, but that's basically what it is. I would say it's not that intimidating anymore. And the other thing I always tell people is don't listen to people like me tell you anything. Just go buy like a Starbucks worth, buy a coffee or beer, whatever you would have binged on Netflix. Just take that and say, you know what, I'm just going to buy a little bit over here. Because we all do this discretionary emotional spending all the time for things that don't matter, that are complete terrible investments. And then we'll like obsessively think about this thing that's got a great track record and not make the call on it. We'll go blow it on like Netflix or something else, right? And so I think it's just not financial advice, but for learning purposes, you will far outpace anything I or anybody else could ever tell you that you could read on the internet or you can learn if you just do it yourself, because then you're like, oh, I get it. It's much easier if that makes sense, right? It's a very tactile learning experience like that. And it's low risk.
Okay, so yeah. So my investment philosophy is passive investment, 3-fund portfolio, keep it simple, right?
Definitely.
And so when I talk to people who want to invest in crypto, that falls into the play money category for me, which individual stocks fall into that same category for me. So I would say that's part of your play money, which should be no more than 10% of your assets, because I would consider crypto speculative type of position. So tell me what your thoughts are.
So I'm going to have a different perspective here and it'll be fun. Because I did come from that. Like I came from that. I always did have that same perspective, but mine is going to sound a little crazy to you. So I come from the school that I used to diversify and I used to be in real estate and I used to kind of have a stock portfolio. And I did all the things that everybody kind of traditionally would say. And to the degree of almost exactly what you just said. At a certain point in time, I kind of convinced myself more and more and more and more of a different thing. And that is that diversification is when you don't know what the winner is. Diversification is when you need to blend out the risk because you're not sure or you don't have the time. And for me, I know what the winner is. There's nothing that can outcompete Bitcoin ever, not even companies or anything over a long enough time horizon because of that supply reality. The infinite supply thing is just hard to fathom how transformative that is. There'll always be more humans, there'll always be more real estate, there'll always be more sand. You can move around in the ocean. There's not going to be any more Bitcoin. Right? That one thing alone makes me, it just kept getting more and more on this side. So I am of the opinion of, for me, not financial advice, of course, but this is what happens when you go all the way to the other side, is you end up taking all of your paycheck and it all goes into Bitcoin, and then you set it and forget it. And that's like just my form of money. That's my form of savings. That's just base layer. That's like what most people consider cash, right? Most people think you just hold on to a certain amount of cash. That's your rainy day fund. And then you go make your speculative investments and, or whatever you're going to do. And all I've done is just swapped out. I do not want to hold cash. I'm going to hold Bitcoin, and then I'll go make my investments and think about other things. Cause that's a huge part of humanity. It's very hard to just sit on your hands forever. We all want to do things. We want to learn. We want to support causes, so that you need the ability to spend, you need the ability to invest. But my baseline is just switched from cash to Bitcoin, and then I'll borrow the cash I need, or I'll liquidate what I need. But I start from that as my principal one, where at first you are thinking about it still in dollar terms. And I used to just put a certain amount over into Bitcoin. Does that make sense? So like I just went teeter totter all the way to the other side.
Yeah. Yeah.
And it's really impossible to go back for me. Like I can't, because once you start thinking in terms of like you're measuring something in this, it becomes very hard to measure it in the other thing anymore.
Yeah. Okay. So, and I expected that to be your answer, right? I knew that you were going to be like, no. Here's my perspective. But let's talk more, because we were talking before we started the interview recording, you were talking about similarities.
Mm-hmm.
So let's dive into that and talk more about how you see parallels between what you talk about and what I talk about.
Definitely. So, I like your work. I mentioned before the show, like I came from reading John Maxwell and the leadership thoughts, and like the mindset, I think, is everything. And there's so much that harkens back to just what probably put me on the course that I'm on, where I ended up finding out about Bitcoin and all that. And so if you think about like a scarcity mindset, if you think about people needing to really understand what they value and what they don't, if you think about like how easy it is to make an impulse decision and feel totally justified in it, and then realize you're just kind of working against yourself, right? And so this all gets into an internal thing. You have to work on yourself, which you say me, right? I think I think it's great. And we both come at I think the same fundamental problem, but I'm kind of coming at it from a technical infrastructure approach, and you're coming from a knowledge and understanding. And you need both. Like you absolutely need both. Where we both believe in basically an anti-liquidation strategy. There's something that you should save, and you should think about how to value what it is. It could be your time, it could be your passion, it could be your money, but to really put that in perspective and to check yourself with emotions. Now, there's a lot of different ways you could do that. For example, like restricting a 401k or putting it in a savings box where you can't touch it, or having two different people on that have to check you before you go spend your nest egg. Those are all methods of doing this, I would say. And I also think that we totally both align on like the messy human stuff, and the fact that the financial system has this embedded stress that we're always like ingesting and or just living in, that we have to purge all the time and think about how to not let it influence us. So there's so many analogies. I was really looking forward to the conversation from, both being people who I think care a lot about the right way or the best way to help, and have like an analytical kind of financial viewpoint of our experience of how to frame it. And I totally used to do a lot more. I spent a lot more time doing the education part until I just ran out of time. I got so busy building technology and running a company and everything. I kind of turned into just more of the financial technology side of it. But they go together so well, like two sides of a coin, that it feels like I believe eventually everybody should own Bitcoin. The sooner the better, and that you start somewhere. The best time to start is immediately, even if it's $1, because just having that hedge, if you will, even if you start with just the hedge, is very much like taking that first step to just prioritize your own values, or to make your first investment, or to really think about how to get your spending right so that you can start to save and invest. Those are those initial learning curves that we all as humans have to go through. We all were kind of no memory, dependent on our parents. We're living off borrowed resources and the good favor of people around us to work, and then we learn how to work. We learn what it's like to kind of have money and the ability to make decisions. We all make bad decisions and then learn. We have to correct ourselves and go down the route of additional learning, right? And it never really ends. And I think probably I'm ranting on this one, but I do think there's just so much to this. Like, we could probably talk for hours. I think your audience would
Yeah.
benefit so much on just like the overlap, in a way of just where do you start where it isn't stressful. And in fact, how do I do this in a way that reduces stress? Because anytime you can do that, you're gonna have a clearer head. When you start to feel like you're building something, the future is more hopeful. You have an outlook on tomorrow that gives you a sense it's going to be better than today. That's always my measure, is if you're doing it right, tomorrow should seem better than today when you go to bed. And when you're doing it wrong, you kind of dread, like, oh, I'm not really sure. Maybe tomorrow's not as good. I better wake up early and get after it. Or I feel like I'm losing hope. And you can use that emotional signal to check yourself against what decisions you've put in place or systems. So yeah, I'd turn it back to you to see, where do you want to take? Because I could riff on this for a lot.
Yeah. Like you said, people should get started. And so my first question is, I'm going to go Google, how do I get started in Bitcoin? And then I'm going to get a bunch of stuff come up. I'm not going to know what's real and what's fake. And
Yeah.
So tell us, how would we get started?
Okay. So
where would we go?
You have to, the term would be buy Bitcoin to start, right? So
Okay.
you're actually converting one form of value for another, but the way we're all going to perceive it is that you're buying something, because that is how it starts. It starts like I am thinking of dollars, or wherever I live, as my currency. That's the thing that we measure in. That's what you pay your taxes in. We are just programmed to think about everything priced that way, right? And it takes a long time to even question that. So you're going to be buying something or investing. Buy Bitcoin is an easy thing, and you'll see there are public companies that offer services that you can say, these are audited financials. These are people who've been around a decade or more, and they've got tons of reputational trust and whatnot. I don't offer this directly to the public yet. I will, but I would say I could recommend a few companies out there. Coinbase is one a lot of people know. There's so many now. So if you don't like PayPal or you don't like Coinbase, there's probably 5 more I could rattle off. Cash App, you name it, Square. It's becoming very ubiquitous. And so any one of those is going to be better, in my opinion, than just going to the stock ETF. But there is still the stock ETF, which is an unlimited kind of on-ramp to anybody that has a portfolio could say, I'll just buy a tracker and an ETF. And that's still Bitcoin, right? It's not quite the same thing as far as you could take it off platform and hold it. But most people don't need to, and nor should they. So you've got a lot of ways to go. And it should be pretty obvious if it's a scam. If it's crypto, it's something else competing against it. If it's trying to give you a deal, like, nobody's going to do that. So that's not real. If it's somebody saying, I got this one-time offer, no, thank you. Like, there's all the regular scams in the world that we see all the time, unfortunately, for everything. And those are out there for crypto too. But the reputable companies that we know are out there that are real, including more and more banks, and financial institutions that are wealth preservers or registered investment advisors or exchanges. Like, you can't really go wrong there, I would say. And especially when you're starting and you're talking about a very low amount. I also advise people to, like, don't even think of percentages. Just zero is the wrong number, right? Zero is the wrong number. So you could figure out whatever the right number is, but zero is the wrong. For me, 100% is the right number. Other people could be 1%. That's a personal decision. That's like a personal financial decision people can think about. It's more about the education and the understanding that you're not left out, you're not behind, and that you understand something from what it is. And I will tell you, the hardest part is when it's so easy to only look at it like an investment. It's so easy to only say, is this price going up or down? And with real estate, it is a much better comparison, Bitcoin to real estate, than it is to stocks. Why? Because we think of stocks as like, I'm going to buy low, sell high. You don't ever want to sell Bitcoin, ever. Like, you never want to sell Bitcoin. I spent the last 10 years just pioneering ways that you don't sell your Bitcoin. You don't want to sell your Bitcoin. If you have to, you want to sell it high, of course. Buy low, sell high. And if you want to, that's great. But, like, really, you don't want to. Like, if you're me, you never want to sell it, ever. Because you're never going to get the next opportunity to get back to where it was, really, in the grand scheme of things. And it's super deceiving to, like, have to worry about and stress. And I don't really advertise ever to anybody. Again, that's not financial advice, but most people shouldn't be traders, right? You should have a long time horizon. And I think with saving as a fundamental, with investing as a fundamental, you wanted longer time horizon. When I was only in real estate before Bitcoin, I would always say, don't ever buy anything unless you could imagine holding it for 10 years or longer. So you avoid that, oh, I'm going to flip houses and I'm going to get rich, right? That get rich mentality that we all have suffered from at some point in our time, or it kind of captivates you some way or another, that you could get rich fast. It's just usually a scam or not a good idea for most people to try to do that. You might as well just go to Vegas and put it on black or buy some lotto tickets, And so I really think the right way to do it is you just buy it and forget about it and you save it and you imagine it, just like generational, like real estate. I can't touch it. Don't get caught up looking at the chart up and down because it doesn't matter, right? It doesn't matter until you're ready to sell it. And that's true of all stocks. And then you don't feel like you're behind the curve or trying to learn something. You don't have to feel like you have to learn how to become some kind of trader and watch YouTube videos or all the crazy stuff you hear about. You just simply are saving, you're just saving money again. And it's just a different perspective of how to save it. And it's not money that you could like depend on at that time, or it's more like a Starbucks. And I feel like you'll learn everything you need to know that way to get started without having to make it stressful. And there's always people that can help you. There's registered investment advisors that could always put people in contact with highly qualified, registered, licensed people, So if it doesn't have that, don't talk to anybody about it. Kind of.
Okay. So what would be any red flags or any common scams that people should be aware of?
Yeah, tons of red flags. So just like with email and the internet and social media these days, there's always been scammers. There's always the person who says, now there's this great deal, double your money. That is, if it just sounds like anything other than what you'd expect if you're going to a normal bank talking to some guy like me that's got my fingerprints in every 50 state, you know the difference if you really take a moment to think about it. So the thing to watch out for is anything that makes you feel kind of greedy and or, oh, wow, there's this special deal going on, right? There isn't really a special deal going on when you think about just this fixed supply of something that is a battery for your savings account. Anything that comes off trying to sell you, oh, it's going to outperform this, don't listen to that. This is the next thing, Bitcoin's old. Those are usually just for people who want to speculate and gamble. And if that's you, that's fine, but know what you're doing. Don't do that unless you're trying to go speculate and gamble. And then definitely watch out for any of the stuff where you can't verify who it is. It's coming through a text message or your password has to be reset, like all the normal stuff. Unfortunately, there's so much of that at the time of this recording. I feel like I get so many calls and texts and everything with AI, and it's not usually even about crypto, but crypto falls victim to all of that too, right? So anything where somebody could be kind of persuaded to think, oh, this is this great idea. Once a week, I have to go click these buttons and then I watch a webinar. That's a scam. It's just assume everything's a scam in Bitcoin and you'll be better off, right? Just assume everything is a scam. And if it isn't like some nice person that you can validate in a company that's public or something, then you can't really go wrong, right? Everybody else, sorry, you're going to have to prove it. We don't trust, but verify. And if you can't verify, you're a scammer.
Good advice. Okay. So before I start wrapping things up, is there anything that you feel like you should mention that we didn't cover?
Well, I would have a question for you. So you know your audience the best. And what do you think is the one area where people need the most education? What is it that it's just a harder part to understand? If you had somebody that feels like they kind of know a lot and probably is missing the opportunity because I know too much and I don't know what you don't know or what your audience doesn't know, what is it that people feel they have the most stress about or the most anxiety, or what that would add the most value to the audience as far as another question that I could actually be helpful with when it comes to, this is new for a lot of people. I know that it's intimidating and I'm sure that we haven't even scratched the surface. So what do you think it is that people need to hear?
Yeah. So if somebody feels like they're behind just in finances in general, they feel like they haven't saved enough, they haven't invested enough, they don't really understand in investing, so to speak, and they're here to learn more. And now we're talking about crypto and they're like, oh, wow, that's just this whole other thing. It might be intimidating or it might be outside of the realm of things that they think are possible for them.
Yep.
So what would you tell them?
Okay, great question. So one, the sense of panic we all have around that is coming from the existing financial structure the way it is. That's not you. That's not your fault. That is the system. And learning to overcome that with, peace of mind and equanimity is always the best advice. Just don't let the stress and the fear influence you, because that's what's going to drive you to make bad decisions, whether it's in Vegas or whether it's with crypto or anything else. So that is a fundamental. Number two, I hope that you do get some Bitcoin soon, because I do think that the whole point is that it offers a different reality. It offers a reality where that is not true anymore, and where you have the potential, we all have the potential to imagine where that is no longer true in the future at some point, that we are not just always on this infinite treadmill. There's a way where you can feel that tomorrow is going to work for you, meaning like your money's going to work for you. We usually only know that in the terms of yield and some investment that you have to buy and sell and pay taxes on. But what if, just what if, you could just work and save and be responsible and do the right thing, and you got to work on the things you loved and cared about, and you could put more time and quality into them because you kind of get past the critical mass and you feel like the future is going to be taken care of. That's how I always thought about retirement. That's how I always think about wealth, is that when you wake up feeling like I don't need to do anything anymore and I'm good for as long as I need to, like that feels like the dream to me. And I feel that Bitcoin offers this potential more than anything else, not from an investment, but simply from a different financial system. So number two, it is very easy to be able to put whatever discretionary money you are spending, if not wasting, not investing, and also maybe what you're investing, a little tiny bit in, and you will no longer have zero. The wrong number is zero. Everybody has to determine what the right number is, but the wrong number is zero, and that'll be true forever. Number three, don't do anything other than just buy it and save it. You don't have to trade. You shouldn't trade. You don't need to think about the next thing that's going to outpace it. You don't need to borrow or lend or do any of this stuff. That's all for later, right? That's all for later. The starting point is much easy. It's almost too easy. And that's why I'm saying it in those terms, is that it's that easy. It's that simple. You have $100. You were going to go buy a Starbucks. You feel like, you know what, maybe not today. I'll put $5-10 in. And then you don't sell it, and you don't have to trade it, and you don't worry about the price. And then you let time do the work, right? Let the rest of everybody do the work who's saving and working. I think that's the best advice to get started. Don't feel intimidated. Don't feel like you have to learn all that other stuff. It's all probably not for you anyway. There's no reason to be doing anything other than just accumulating some wealth for a while to save. That's the first phase. Just go back to when your first job, right? Your first job before you first started working was just do a good job, work at something you love, save some extra more than you spend, and keep it simple, right? And I think that is where we align, is that you're really focused on the people and the mindset, and to keep it simple and the philosophy, and to get away from the negative thinking and the framework. And I totally resonate with that. And so I hope I've in some way added some value to people. Stay that course. That's the right course.
Yeah, absolutely. Thanks so much for sharing your knowledge and wisdom with us. Tell us again what you do and who needs to find you.
Yeah, good point. So for starters, I've made all those mistakes. That's why I'm coming from a place of saying, after 15 years of this and doing all the things to be interested in this and learning, I could tell you don't do all those things, right? It's just like, unless you're interested, right? If you want to go learn how to lose money, there's a lot of ways. It's fun. It can be fun, but you don't have to. Like, people like me have done it, and we'll just tell you it's just the wrong way to go about it. So my name is Shawn Owen. The domain name is saltlending.com. Salt, like you put on a steak, it tastes good. Everybody loves salt. The name is because salt historically preserved wealth. It was the first form of real money that was a commodity that was global. People would use it to save their food. They would use it to save in salary. It was what the word salary came from. And so that embodies what we're all about, which is a new way of thinking about wealth preservation in light of, we want tomorrow to be better for all of us. There's got to be a brighter future around the corner, and we should all be working towards a common goal that's fair and equal and has the ability for all of us to be lifted together in a democratized way. Saltlending.com, when you've saved up some Bitcoin and you think back to this someday, we'll always be there, and we'd love to talk to you. We can help people with referrals and or get started. There's lots of different ways, but basically we offer the ability for people to save Bitcoin, accumulate, and borrow against it. And the main reason people do that is that once you, let's say you had real estate, you have a home and you don't want to sell it, but you could use a little cash to get your kids to college, you can tap into it and borrow some amount of it against it. We do that for Bitcoin. So you have X amount of Bitcoin, you don't want to sell it, you want to hold it forever like me, and you want to borrow some cash for an event, a life event or another investment or something. We issue cash against that, or stable coins, which is for another day, and make it really easy to just treat it like you would in a digital banking environment. And we think that's what everybody deserves, is that infrastructure of what you'd expect at your normal bank, but in a way that also offers all that same value to a scarce asset that everybody can participate in, called Bitcoin, not crypto, Bitcoin. So that's it.
Well, awesome. Thank you so much.
Thank you.
It's been a pleasure having you on, Shawn. I have a closing nugget for our listeners, and that is education and understanding first, know yourself second, allocation third, and emotion last.
Love it.
Thanks, everyone, for listening.
Thank you so much. It was a pleasure.
Thanks so much for listening to Real Money, Real Life. Want to see what's blocking you from financial confidence or discover your money personality? Head to the resources page at lindagriz.com for our free quizzes. That's LINDAGRIZ.com/resources. If you're loving what you're learning, be sure to subscribe and leave a review. It helps more people find these conversations. This show is hosted and produced by Linda Grizely Ventures, LLC. Linda Grizely, that's me, is an investment advisor representative of Nectarine, an SEC-registered investment advisor. Linda Grizely Ventures, LLC is separate and unaffiliated with Nectarine. The views expressed on this show are those of the individuals expressing them and do not necessarily reflect the views of Linda Grizely, Linda Grizely Ventures, LLC, or Nectarine. Guests on the podcast may express opinions or discuss financial strategies that are their own and should not be considered recommendations or personalized financial advice. This podcast is provided for informational, educational, and entertainment purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any securities or other products. Listeners should consult their own financial, legal, or tax professionals regarding their specific situation. Please visit hellonectarine.com and lindagriz.com for all relevant disclosures.